Good morning, everyone. It's Ben Buckner and Dan Bosse with Ag Resource Company in Chicago. It's Wednesday, June 18th, pre-holiday session at the Board of Trade. And I think relative calm is defining markets, at least so far this morning. Grains steady to a little higher, financial markets doing very little. I think what's on top of mind for everyone, and we're all scratching our heads, I think, is how to assess risk in the short term given the expanding conflict in the Middle East. And does the U.S. get involved in any kind of capacity? I think that's the big question. It's going to be kind of unknown at how we sort this out, at least in the short term, medium term. But again, that's, I think, the big question on top of everyone's mind. At Ag Resource, though, we always stay focused. And I think our guiding light's going to be physical cash grain markets and physical supplies now and 3 months from now. And we don't see a huge change in those outlooks. But Dan, what's on top of your mind, and what do you think about the sort of expanding geopolitical risk that we're seeing in the marketplace?
Well, I think that's right, Ben. And, we always focus at Ag Resource on cash markets, and we're 8 trading days, if you will, to the big June stocks and seedings report on the 30th, but we're 7 trading days up until that first notice day against July contracts. So, on a futures basis, there's lots of liquidation or at least forward rolling in the July futures left to be accomplished. But in the background of all of this is, of course, what's going on between the Israelis and the Iranians in the new brewing war across much of the Mideast. And so, this morning, the Ayatollah Khomeini has indicated that Iran says no to Trump's unconditional surrender offer. That means that the next move is President Trump's. Will he, of course, drop bombs, bunker busters, as we call them, on nuclear sites within Iran, or will, of course, he leave it up to the Israelis to take this war forward? Either way, it's likely to be ongoing. But heading into a holiday on Thursday, Juneteenth, if you will, there is extra concern in the markets. And what you're seeing is some short covering, particularly from the funds in wheat and corn, which has given the market some lift. Funds already long bean oil and soybeans, maybe not as much there. So that's kind of why we're seeing the yin and yang this morning, Ben, in the markets as they sit. I also would mention that as we think about commodities in general heading into the holiday, look at the CRB index. This is a basket of 28 commodities. We are now back at the late 2024 highs. We, of course, can also look not far away from the red line, which is going to be the 2022 highs. Now, a lot of this rally has been based on metals. Of course, there's been a lot of gold buying on concerns about the wars that are ongoing, the 3 of them around the world. We're also seeing energy prices rising. So this is why the CRB index is doing so well. But again, these are some upside targets. Now, inflation is not indicated in the United States or globally, but we need to watch the CRB very carefully here to see if it does pull in some money into the commodity space. In terms of when we come back from the Juneteenth holiday, I'm sure the focus will be on the war and potentially will be on the corn market. This is a weekly corn chart, just so you can see where prices are. We're kind of wedged, if you will, in a triangular formation that shows support at around, 430 a bushel, 430, 435, with resistance being at around somewhere in the 445 to 455. So notice where the boundaries are set. We're now to the apex of that triangle, and how we break out of this will be very important going forward. So we'll watch this very carefully, Ben, as we go forward. My lean will break out to the bottom because of favorable central U.S. weather and a record large crop, along with record world corn exporter supplies. But let's see how it all goes forward. As we also look at weather, which is the most important ingredient probably for the grain markets on a longer term basis. This is a graphic here showing where we are looking at percents of normal rainfall for the month of June. I take the forecast from the European model, we apply it to the June 30th, then supersede where percents of normal would be. We do have this avenue, if I can use that word, of dryness that really stretches from southeast Nebraska up until Milwaukee, Wisconsin. So parts of Iowa are needed to be seeing some rain, if you will, because rainfall has been less than expected. But as we look to the north of that, as we look to the south of that, plenty of rain. Corn, as you said yesterday, is pollinating across much of the south. Really no problems there in terms of soil moisture. If we look at where temperatures have been looking forward, we also get a sense of where we're going. And excuse me, I'm going to bring in one more map up before we get to temperatures, Ben. This is the total rainfall that would fall across the U.S., if you will, from June 1st to June 30th, should the European model forecast verify. And in red, you can see totals above 3 inches. So there's a lot of 3 to 9 inch totals across the central U.S., Maybe the western U.S. or northern plains are a little drier, but this is more than enough moisture, if you will, for crops, at least at this stage of vegetation growth. And this would be temperatures in terms of where they are for the month of June. So a little bit of warmth, if you will, across the eastern U.S. This was needed because of late plantings in Ohio and Pennsylvania on crops. But in a general sense, this warmer than normal nomenclature for the central and eastern U.S. is very helpful to at least get crops going. Lastly, Ben, we don't talk about livestock very much, but boy, the cattle market has been extremely active in the last 3 trading sessions. You know, sharply lower on Friday, sharply higher on Monday, sharply lower yesterday with losses of nearly $5 a hundredweight. I bring this up because as we look at box beef values at the middle of June, they are at record highs. There's no evidence that the consumer is backing away from the beef market as it sits. And so, you know, as I look at the Mexican border still being closed because of screwworm, it's really difficult for me to become bearish longer term of either cattle or feeders. And I think cash feeder trade will remain very stout this week. Maybe cash cattle are steady or a couple bucks lower, but boy, the discount of futures to cash is wide enough. I'd be really careful about selling this break in the cattle market, Ben. We are still bullish of proteins as we look forward, but a big increase in open interest in the hog market, you need to pay attention to the proteins. That's where this all is going. And that's where, if you want to be bullish, there is some bullishness in the ag market.
Yeah, I think that's right. Yeah, we have not seen any evidence that the beef market solving its supply issues. We do get a cattle on feed report this Friday. And to that end, you know, get $1, get you in for 30 days. I think our focus in the grain space is probably going to stay on weather over geopolitics, if just a little bit. It's, you know, we're almost crunch time in terms of reproductive stages. And we're going to be able to put together the puzzle a little better over the next couple of weeks. I mean, we're almost to the point that we can fine-tune weather-based corn yield models as we start to peek into July. The U.S. Weather Service on later this week also will update its July climate forecast as well as its seasonal forecast as it does this time of the month. Every month. So again, the pictures will start to come together in terms of probable supplies, ending stocks in the U.S., and we'll have all that research available to you guys. So yeah, probably choppy today ahead of the Juneteenth holiday on Thursday. A lot of things going on. I don't think there's going to be a lot of appetite for new risk today. But again, weather is going to be play a greater role in price discovery, and it's going to get really important. So final words before we sign off, Dan.
No, you're right, Ben. I mean, corn crops are made or lost in the month of July. It's that simple. And so weather during July will be the key ingredient. And again, we'll have a 16 billion bushel crop potentially. And that's you know, something that the market's going to have to deal with. So there's plenty of corn in the world. Last year's bull is this year's bear. So that's all I know, Ben. But have a good trading day. We'll be back on Friday. No reports tomorrow because the markets are closed. And we'll all talk to you then. Be well, everyone, and safe trading, and good luck today.